Hello and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for June 5th, 2010. Our website is blogs at accendotraders.com, where we put together effective video technical analysis trading plans on a daily basis. We believe at Accendo Traders that there are four components to any effective trading plan. First, how do you determine the direction of the market? Then, what is a good location? Where are you going to look for entries and exits? And then, what is going to be your triggers? Technical analysis, market internals, whatever it may be. And finally, how do you manage a trade, with most importantly being stops. So when we look at the week that was, we can see that the market was down 200 on the Dow, 24 of S&P, NASDAQ down 37, down almost 5% for the year, down about 2% just for this past week. And it's mainly brought on by more global concern. There's a new country debt concern has risen. And then we had a weaker than expected jobs report, which we will take the time to look at Friday's trading action. So again, we did have some overseas global concerns. First, we had a weaker economic report coming out of China. And then throughout the week, we had some concerns with the Gaza and Israel stopping aid in fear that there's potentially weapons on the ship. And there was a lot of video out over the past couple of days over whether or not I think they air dropped into one of the boats, but more importantly, more concerned, they stopped another boat from I think Ireland yesterday, so more concerns about that. And then our new country, as far as the default on their debt, is Hungary. As far as economic data for the week, we had a better than expected home sales on Wednesday, and Wednesday was a good day. However, Friday, we had a weaker than expected non-farm payroll. Specifically, the jobs created came in at 431,000 versus 500,000, of which the majority of that 431,000 are temporary census workers. So there's still concern to whether or not the private sector is creating jobs. Unemployment did, however, drop to 9.7% from 9.8%. There is some corporate news. Nothing on the earnings front. We are pretty much out of earnings season, getting ready to start up back in July. And but starting on Monday, the Apple Worldwide Developer Conference will start. We know Apple's been a big driver of the market, especially for the NASDAQ, and pulling the market up. So maybe something. Some crazy announcement, the iPhone on Verizon, whatever, some crazy announcement could be made that could move the market higher. And E3 starts the following week, and there'll be some big eyes on Microsoft's Project NATO, and Sony last year talked about the Sony Move, which is basically their attempt to capture the Wii market. This week, we don't have a lot of up. We do have consumer credit on Monday that can move the market, especially if it's better than expected. And we have Fed's base book on Wednesday. But overall, coming into Monday, we are going to watch that afternoon report for consumer credit. As I said, earnings season has come and gone. We'll wait for the next one. And we do have some splits that we are watching. Just want to go ahead and take a moment to remind you guys that the Accendo Trader 30-Day Challenge will be beginning on July 1st, 2010. Again, beginning of July, we will start our Accendo Traders 30-Day Challenge. And those of you who have participated before know that it's just a month-long series, educational series on getting people up and going and trading. A video will be posted each night. We want to get the feedback, people posting questions and helping each other move along as attempting to become better traders. But this 30-day challenge, compared to the ones in the past, will have a futures slant to it, learning how to get started trading futures. So again, July 1st, our first video will pop out there. Accendo Traders 30-Day Challenge. Watch the video, post your questions. Let's start our community. And then each Saturday in July, we will have a free webinar where we'll come together as a group and answer any questions as a large group also. So again, Accendo Traders 30-Day Challenge, July 1st, 2010. I do want to go ahead and take a quick moment to look at Friday's action and just kind of give you an idea of what some key things to look at. There was an article that came out this week about the legendary PPT team, the Plunge Protection Team. And I think what is interesting is that if you look at this, and what the PPT does, or what the article talked about, was that in the afternoon there was always a afternoon rally. So if that's true, it's interesting to look at this week and see that in our afternoon sessions, we're at 10,050 and we still dropped 100 points. NASDAQ dropped, so the sentiment of pushing us lower certainly is here. We dropped 100 points in like 5 minutes right after the 8:30 jobs report. You can see how red our little Rubik's Cube is. But the other thing is, take a look at our general numbers here, and you can see obviously on a day like this we had 84% declining versus advancing stocks. But the other thing is, you can see on this look we have 141 compared to 52 stocks making new lows. Here's the big one. Notice, just a month ago, this was green 80%. How many stocks are above the simple moving 50 moving average? 80% of the stocks are below the 50 moving average. And over 50% are below the 200 moving average. Again, internals are definitely bearish. Coming to the daily chart of the Dow Jones. Again, on the daily chart, we can see a couple things. First and foremost, you guys who've been watching with us for a while know that we said our battleground for support is at the 9,900 level. That's going to match up with our February low, and you can see that our Friday drop came down to 9,900 and bounced up. So we want to continue to put an alert there at that 9,900 level to see if we're going to break lower. You can see that over for the month of June, we're kind of in this, really the past 2 weeks, consolidation pattern between 9,900 on the bottom side of the Dow and all the way up to about 10,250 on the top side of that. So that's going to continue to be a tight channel, and we want to see again, can we break higher? It was nice to see that we got our retracement back up to an air kiss of the 20 moving average, but again, we have a little consolidation pattern that we have to watch. As far as our indicators, stochastics are rolling over. We are about to get a nice crossover to the upside for the MACD, but it's rolling back down. And RSI is down. Obviously, Friday's action is going to be bearish. We have to watch for that. As we switch over to the NASDAQ, we're going to see that our February low is about 2120, 2125. We never got down there. So the NASDAQ is giving us plenty of room to fall. The NASDAQ did make it all the way to the 20 moving average on the daily chart. So it has room to fall to get down to this 2150, 2120 level. Which is not good, for the bulls, because the NASDAQ has been leading us. Maybe the Apple conference will have a news that will drive us higher, but you can see our indicators just turned bearish on stochastics. MACD is getting ready to go back down to bearish, and RSI is already heading lower. Finally, we'll finish off with the S&P 500 on the daily chart, and we can see, just like the Dow, we're in a tight consolidation pattern from about 10,060 on the bottom side, which matches up with our February lows, and then on the top side, right about 1,100 is the top of our consolidation pattern. Basically made it to the 20 moving average before our fall. Friday's action is going to really skew our indicators, but we got a bearish crossover on the stochastics. MACD is getting ready to head back down, and our side is heading down. That's bearish on all fronts. Folks, we're going to bring our video to an end. I definitely want to recommend that you subscribe to our podcast to get the full amount. We only have 10 minutes for YouTube, so definitely want to subscribe to our podcast. Our partners, we've got a great futures trading room for you. Over 88% success rate on their calls. Usually they like to use 3 to 6 contracts to get to these daily totals. So you can see the market was closed on Monday, almost 2,500 on Tuesday, 1,500 on Wednesday, 1,400 on Thursday. Friday was great. They haven't posted their actual track record yet, but I was in there. It was great. Of course, results are not guaranteed. You got to trade your own risk, but a great futures trading room. Alex is a great room call leader. If you're going to trade futures, we've got a broker for you. And the most important thing is that you've got an intraday E-mini margin as low as $300. And if you sign up through us, you can get 20 free contracts. You can demo the platform, and you can sign up. 2 different links for you. We got a great charting platform that you can create your own filters, and we got a futures trading system. It's turnkey, implemented, and it's great. But as you guys know who have been sticking with us, it's not the system, it's the psychology that you have to master. So, as I said, our YouTube folks, go ahead and download the podcast to get the full version of this video. Check out Accendo Traders on Facebook. Follow us on Twitter. And the 30-day challenge starting July 1st. It's going to be great. We're going to get everybody up in trading futures. And as always, if you like our wonderful free education videos, please donate. Trade at your own risk. You can lose all your money. This is for educational purposes. I'll see you next time.